Hey, what's up guys? Thomas Palaskis here for your weekly market update. But before we get into that, I wanted to tell you a little story about one of my friends. His name is Rates. Oh, look at that. There he's pulling up to his house. Oh, there he is. There's my buddy Rates. He's gonna go inside of his house right here. This nice house. Just like many of you, I sold Rates this house. And look at Rates. Rates went through the roof.
All right guys, welcome back and thanks for watching Rates Go Through the Roof. This is Thomas Palaskis here for your weekly market update, and a lot has happened. I'm sure you heard the Federal Reserve just recently met and they stated that interest rates are to go up. They even raised the rate 0.25%, the federal rate. Well, they're saying that unemployment is down and inflation is at a 40-year high. So in order to hedge against that inflation, to slow it down a bit, they have to continue to raise interest rates. They also mentioned that we're going to see another 6 rate hikes every time they meet. The Federal Reserve gets together in a meeting to discuss. They predict that they're going to raise these rates 6 more times at least. So we're looking at 2 years more of interest rate increases. Now remember when they were saying inflation was just transitory? Well, I think those are all lies, because the truth of the matter is inflation is here to stay. And we're going to see hyperinflation and a lot more restrictions with the supply that's coming in. And officials are downgrading their predictions of economic growth from 4% to 2.8% for the year. And not just rates, guys. Rates are up, inflation is up, and what else? House prices are up. According to Redfin, they're saying that house prices, the median sales price of houses throughout the nation is up 17% year over year. And if you've been out there looking, shopping for homes, or you know someone is, you know that inventory is at another historic low. We've seen low inventory since the beginning of the pandemic, and now we're continuing to see these restrictions on inventory, making it very competitive for a buyer to get a house. How can we get more inventory? Where is the inventory going to come from? Well, there's a couple of factors that come into play that we might see some more inventory start to come and hit the market. Foreclosures were actually up 11% in February, and with the end of forbearances, those expiring, we're predicted to see more foreclosures. Now, foreclosures do take several months and maybe even up to a year at times to actually hit the market from once it does foreclose. So we're going to start seeing that foreclosure inventory possibly start slowly coming on the market in the next 6 months, and even more possibly in a year. Now, of course, just because there's foreclosures hitting the market doesn't mean those are going to be the best deals out there, because the banks, they want to get fair market value for their homes as well. So when they foreclose on a property, they want to make sure that they're selling their assets for top dollar as well. And most banks have their asset management companies, and they have their vendors and contractors that are going out to these houses, fixing them up, and then putting them on the market, shooting to get the most money they possibly can for these homes. And there's also new development. There's more buildings, more developments happening, probably in your community and in communities all across the nation. So we're seeing an uptick in the amount of inventory from new builders, and we're potentially going to see 1.5 million new homes being built, and those homes start coming on the market here pretty soon. So that's a good amount of inventory as well. Now, with all the inventory that could influx into the market, does that mean the market is going to crash? Does that mean house prices are going to go down? Well, look, the truth of the matter is we're at such a historic low inventory that even with more homes coming onto the market, we're still going to see prices go up a bit. Now, it might not continue to rise at 17% year over year, and other economists are predicting, 7% year over year house value increases over time. House prices are still predicted to climb, just at a bit of a slower rate than they have been in the recent years. All right, you guys, thanks again for joining me for another market update. I really appreciate you watching these videos, sharing with your friends, family, coworkers, church members, your neighbors, everyone. Please let me know if you have any questions, concerns. Make sure to subscribe, like, and comment on all of our content. I appreciate you, and I'll see you next week.